Right. So you guys should be seeing the screen by now. So essentially, we got what was anticipated, which was the FOMC holding the Fed funds rate steady at 5.25 to 5.5%, and retained a tightening bias. So it was a hawkish hold. Um, the summary of the economic projections was showing that 12 of the 19 members were in favor of hiking rates again this year. So that really fueled a bid in the US dollar, um, which I'll try and find on my chart over here. So we got a rally right up into, well, the highest target area, really, which was a test of 105. That was in the DXY index, which measures a basket of currencies versus the US dollar, and the predominant one being the euro. It's about 46% weighted to the euro. And we got that subsequent sell off, which some of you might have enjoyed trading. I mean, we talked about it in the live coverage, and I sort of drew that potential schematic. Didn't quite fulfill the actual schematic itself, or pretty much. But it hasn't yet come back up really to test the old support area that would be expected to act as resistance. So we've done the majority of what I drew, and I'm just waiting to see if we come back up into the resistance. So we'll turn that red for resistance, back up into the resistance area, which it may do. So we might get a pullback and then a downside continuation. And if you recall, if anyone was paying attention to that analysis, it was based upon the weekly template. So I talk about this often. And what I'm looking for on the third day of the week is a parabolic move either to the upside in continuation with the trend that's been building, Monday, Tuesday, Wednesday continuation, or Monday, Tuesday, Wednesday blow off. So we got a bit of both, really. We got the parabolic move and then the blow off to settle the day lower. So we got a lower close, and that's quite typical of a Wednesday, where it, as I said, it either continues with the trend in an explosive manner, or it pulls back into the trend in an explosive manner. And we came up high, dragging traders up high. They were all trapped going long, and wiped them all out to the downside. And we're coming, in fact, right in towards Thursday's origin of the rally. So we've got that to target for the next couple of days, if not the day ahead. So a good question from a trader was asked, what events are coming up that could uh, jolt the dollar even higher? So we've got the Bank of England. So what we're relying on now in terms of fundamentals is the divergence between the central banks. So we've had a dovish European Central Bank, and we're now waiting to see what we get from the uh, SNB, the Swiss National Bank, and the Bank of England, and also the Bank of Japan that's coming up later this week. So for the day ahead, Thursday, we get the SNB over here, Switzerland. We get the Bank of England, and what else do we get? We get some jobs data out of the US. Those are the significant news to look out for. And then what's this here? Oh, we also get the Bank of Japan interest rate decision, which of course will be in Asia, but it's tomorrow for us Westerners time zone. So a lot going on again tomorrow. So plenty to look out for. But as I stress, it's the central bank divergence theme that I would presume is going to keep the dollar rising or keep it under demand, supported. That's not to say that we can't pull back. I mean, of course we can. When markets displace, we expect to pull back, but it could be an opportunity to buy the dollar lower versus other currencies and various instruments such as the indexes. So we talked about the prospects of a move lower as well in the stocks. I don't know if anyone caught that analysis that we were talking about in the live coverage room, but I was drawing a bearish picture using the S&P as a base case for lower stocks. And if we can have a quick look at that. So, well, that's played out, hasn't it? So, and it's on its way. So, what I was talking about was that the market. So we've got a rising market, and we came into the structural point, which is over here, and I've tried highlighting that, and I've explained that this did break structure, although it wasn't particularly convincing because we got sort of a wick break below that level. But it's a break nonetheless. And anyhow, we moved up, we failed on the upside, and we've created that bearish trend to the downside. And uh, I noted the W formation here, and I singled that out as a bearish scenario because we've already come up into the neckline resistance, and well, the rest is history. So this is expected to continue lower for a retest of the structural support. And given that it's already broken, it's unlikely. Well, I don't. Well, it's less likely to act as support again. I mean, we're likely to see. Um, Maybe the price will stall, but I think it will. It This won't give us enough support to stop it from continuing lower. Is what I'm trying to get at. So keeping note of that. So is bear. Risk sentiment is soured on the back of this hawkish Fed. It's not really what risk markets such as the stocks, oil, commodity currencies. There's nothing really what they want to see, and a stronger dollar does no favors for those markets. So I'd expect this to continue. I expect the sentiment and the narrative around the Fed to be long lasting. We've got plenty of data that's coming up ahead of the next event, Federal Reserve interest rate decision. Um, we were talking about the long lived rally in the dollar. So you've got weeks and weeks and weeks of rises. And this week was looking as though we were starting to come in to test that. Well, I'm going to use a different chart. I don't want to take off those scribbles. Right. So we've got all of these weeks here. So this week was looking as though we were starting to correct, but I think this continues from here on to the upside. We'll have to see how tomorrow pans out. So the next level of resistance then on the weekly basis is right up in here, 105.88. And therefore, I mean, this W formation here is still in play. I mean, we can still come up into here and pull back. Or perhaps we're going to, instead of the neckline being support, perhaps perhaps in here it will act as support if indeed we come back into that, having moved higher for a correction. It won't be particularly deep of a correction if it does. So I don't know. I'm just a bit cautious at this point because I mean it really is a strong rally that needs to correct at some point. So, I mean, maybe we will come down into the 38.2 and neckline. But anyway, so something's going to have to shift the narrative, though, for that to come to fruition. Right, I'm going to try and re-share my screen. It seems as though someone's got a problem there. So I'm going to do that again. Share screen. Right, I hope you can see the screen now, Zeb. All right, I'm glad you did well on the Euro. That's great. Yes, me too. I stayed on the sidelines. Nothing wrong with doing so. I mean, it was. I mean, hindsight, it was a pretty obvious trade, wasn't it? The euro. I mean, on the back of the hawkishness and firm dollar. Um, to be very honest, I was ahead in technology, trying to sort out my. I've got a couple of new monitors that I've bought, and they're not compatible. So it's been quite a frustrating afternoon trying to rig it up. But never mind. But in terms of the Fed, I generally do like to stay on the sidelines. Anything can happen, but no, it did seem a very obvious low hanging fruit opportunity across the board, really. Um, anyhow, okay. Are you seeing the screen again, Zeb? So, so that's where we're at. Tomorrow is Thursday, so today started the day count again. So now we've got Wednesday, Tuesday, and Friday. So you can regard Wednesday as sort of like an initial balance for the next 3 days. Well, the next 2 days, Thursday and Friday. So just as Monday, Tuesday, Wednesday set us up for a sell-off in the euro, for instance, we've now got Wednesday, Thursday, and Friday as a new template. So on the chart, what are we looking like? Let's have a look. So let's use the dollar as a base case. So um, essentially, what we've got here is a new 3 day cycle starting out with a break of structure. A break of structure. Yesterday's highs. So we've broken yesterday's highs. We're now coming up into last week's highs, right? So we're high up on the week, on the weekly template. So we've come up. Let me actually bring the template up, be more useful. I'm going to get rid of all the scribbles. In fact, I can't start fresh. So we're high up in last week's range. We've broken yesterday's highs, yesterday's closing price, and what I anticipate is a break of last week's highs, and most breakouts fail initially. So, on the break of last week's highs, we can be in anticipation of a pullback. So, perhaps we're going to have Thursday as a continuation day, pulling in higher time frame traders, and no idea how high it can go. Let's have a look. If it's uh, so, let's just mark off the obvious levels as this high over here, 105.88. That's on the monthly chart. So let's say we were to come up for a test of that level. And we're really not very far off it, so we could even come up further, I think. Not quite as far as that. Um, maybe that inside bar. Wonder if the volume profile will give us anything to go on. Looking for an upside target for the dollar. No, we can't get a volume profile on the Dixie. Okay. Fair enough. Right. So, I'll leave it as there then. So, well, we can actually come into here as well, perhaps. I'm just trying to find obvious points of traction. Okay, that's right where we are. Right. That looks reasonable. So, right. So we've broken above last month's highs. And we're now coming up into last week's highs. So we'll mark that last month's highs. So we're already in breakout territory. Hence why I have the W formation on the weekly chart negative in play. But given the hawkishness now, I think the dollar has more to run. So we're coming up into last week's highs. We can measure this correction. This can also give us a gauge for how high we might be coming up. So impulse, correction, continuation. We've got the minus 618 aligning almost, well, not bang on, but in line with our upside target, our initial upside target. We've also got the minus 27.2 at 105.64. So these are typical areas of resistance that we can be targeting. So, point being, I think we can move on up, but then perhaps we're going to roll over into longs that are being built up over Wednesday and Thursday. So maybe Friday could be the cap and looking for the pullback. I think Thursday is a continuation of today's move. So you can apply that across the board, across various instruments. So stronger dollar, weaker stocks, weaker gold, weaker euro, weaker commodities and commodity currencies. Okay. Um, so yeah, you can apply the volume profile on the euro as well. So any questions before we wrap things up and call it a day? Congratulations to those who did well out of trading the Fed. And please give us a thumbs up in the Trustpilot, FX Street Trustpilot. If you haven't already, that would be great. If we're doing a good job, let us know. Let the world know. We've got a couple of people typing through here. I think I don't know. I mean, I'm just, if we're talking about the US dollar, I mean, if you've been tuned into our meetings, then we've been talking about this weekly run. I mean, it's not unprecedented, but you'd expect a pullback at some point. So it's just about timings, and it's hard to envisage a pullback when you've had such a hawkish outcome from the Fed today. So, so we were a bit premature in thinking that perhaps this week was going to be the start of the weekly pullback. So at the moment, I'm not looking for a pullback. Not until we see a deceleration. We're going to have to monitor the daily chart again for a deceleration, because what I think what's going to happen here is we're going to make higher highs. So we can't be expecting a pullback on the weekly chart if the daily chart is making higher highs. So I don't know. I might be completely wrong, and perhaps we'll, for whatever reason, pull back. it's unlikely. So you've done what? Made 40% on your account since the 1st of July. Well, that is outstanding. Exceptional work. Very, very good. And that's thanks to us, is it? Excellent work. Well done, Zeb. Have you given us a review in the Trust Pilot? Be great if you could put that in there. And we're looking to build this service for the better. So more things to come. I'm personally heading or getting planning. I'm going to Barcelona to the head office the end of this month. I fly out on the 30th to Barcelona, and we'll be getting together. The team will all be getting together and putting our heads together for a brainstorming week in how we can uh, add value to you guys and grow the services and so forth. So we're going to be hard at it, and then I've got a couple of weeks off seeing family in the UK. But between now and then, I am actually working on a swing trading course, and then, well, actually both. I mean, a day trading. I've got some plans. In fact, that's something I'm going to be doing tonight. Is working on a strategy, a mechanical strategy that you guys can just follow, rule based. I don't want to make too many promises, but it's looking good. And in fact, if anyone wants to join me on the back testing of it, that would be very helpful. It would require people volunteering to spend a couple of hours a day over a number of weeks. If if you wanted to back test over um, a number of instruments, I'd like to get sort of a hundred setups back tested across a number of instruments. But anyway, so that's all in the pipeline as well. So um, okay, fantastic, thank you. So for me, it's quite difficult putting out day trading signals through the system that we're currently using because it's very cumbersome. We have to go through about, I don't know, I got I was ran through it the other day, and it's connected to a broker, but we've got our own back office that needs to straight through processing to the broker, but we need to jig around with two different systems. So anyway, by the time, I mean, as you know, the day trading setups are fast paced, done on the 3 minute, 1 minute chart. So that by the time I've done all of that, the price would have moved, and there's no point giving you late signals. So, but again, that's in the pipeline. We're looking at doing something straight through TradingView. So I think that's going to come up shortly. But in the meantime, I'm trying to come up with a mechanical based strategy that we can all use um, to take out the fear of missing out, the fear of getting in, any debate as to whether to get in or not. It will be rule based. 1, 2, 3, step 1, 2, 3. If all of these line up, you trade. So that's what I'm working on. And then with the swing trading, it will be an end of day signal service. There won't be many trades per week, I don't think. Maximum maybe 3, 4 setups, and maybe only one of them might come to fruition, and it might be a win or a loss. That's the nature of swing trading. If so, it's not my preferred methodology for trading, but nonetheless, there is demand for it, and it's a decent strategy that we're putting together. So I've done the PDFs for it. Now it's just all about sticking it into videos and getting it across to you guys. Right. So I'll come back to you guys then. Those who have said that I'll even put a note out specifically about it. And I think we'll even start a back testing channel, which would be good in the Discord group. We can have something specific to strategies and back testing. So many good things to come, guys. So I'm going to leave it there. Have a fantastic morning, afternoon, evening, wherever you are. Thank you very much. Appreciate that comment. Thank you. And I shall see you tomorrow. Have a good one, guys. Thank you for being here. Appreciate you all. See ya.